I don't know about you, but I'm pretty happy that the election is over. Uh, that was just a lot of bombardment with tons of political ads and things like that. But I get a lot of questions, and I'm sure you've had the thoughts also on what are mortgage rates going to do under Trump's second presidency. Whether you hate the guy or you love the guy, let's look at this from an economic data point of view and see if we can get an idea of how things can shake out. So my name's Miles Pitcher. I own Superior Lending, and let's take a look at this. So a couple of points to consider, and a couple of things before we begin. This is an interesting situation to be in where we have a president who we're able to go back and look at what they've done in their first presidency, right, in 2016 to 2020. So we can reference back to that. Then the other thing that we need to remember and consider here is that inflation is the enemy of mortgage rates, right? If inflation goes up, rates are going to go up. And so as we look at each of these policies or things we anticipate that Trump's going to do, we need to look at it, how it's going to affect inflation, also the job market. So number one, there's a lot of talk, and even in the campaign, Trump talked a ton about imposing tariffs. So he did that also back in 2016. We're going to call it a trade war tap dance. And the reality is that until there is actually an implemented tariff, which is highly inflationary, the talk of it may be just talk. And so that happened in 2016. If we get into some kind of a trade war where we impose a tariff and China imposes a tariff on us, then that's a whole different ballgame. That is inflationary. That could really hurt rates. But for the trade war stuff right now, my personal opinion is that it's just going to be a lot of talk. Things will be worked out without tariffs being put in place on some of these other countries. Second thing is we hear a lot about deficit spending. Trump's going to spend a lot of money, and that spending could be inflationary and hurt mortgage rates. The fact is, he's talking a lot about cutting, but if we look back at his presidency in 2016 on his spending and what effect it had on rates, really it stayed within a pretty steady range. And so his spending levels had very, very little effect on mortgage rates. Okay. The next one is housing affordability. This is a big one. Trump really wants to he wants interest rates to get lower, and he really wants housing to be affordable. And so there's just a couple of ways on the housing thing that he can do this. Number one, if rates are up above 6.5, it makes it really hard for builders to build homes and sell those homes. Okay. So So as we look at this, he wants those rates lower. He may do some things known as quantitative easing, which happened back when that basically means that they're spending money to artificially buy or to buy mortgage-backed securities that artificially lowers interest rates. Some of our lowest rates we had, when you hear people talk about their 2% interest rates, that came from quantitative easing. I guess Trump could do some quantitative easing that creates problems down the road, but it would temporarily get interest rates down, make housing more affordable, and it would make it so that the builders could build more. The other thing he may do is take measures, deregulate some things that allow builders to build more homes. If we increase the supply of homes, that's another way of making it affordable. Okay. The next one's the Federal Reserve, Jerome Powell. And Trump's going to lay some heat on him to try to lower rates. Jerome Powell has already come out and said, hey, we are not influenced or beholden to the president. We act independently. And so there's some pressure there. Jerome Powell is going to follow the economic data, right? If inflation shows that it's getting better, or we see recessionary type of information coming out, like the job market weakening, that's going to motivate Jerome Powell to keep lowering the federal funds rate, which will ultimately create lower mortgage rates. It will also create an environment that is better for builders and being able to build more homes. We've touched on already the regulatory adjustments or the deregulation going on. We believe that Trump will pull back some of these uh, regulatory agencies that could open up some of the ability for these builders to build more homes or even to make them more affordable. So there are some things to consider, to look at. As I look at all those things, my personal opinion is that I don't believe that interest rates will shoot back up to 8% with Trump. They've already moved up after the results of the election. However, I do believe that they will turn and start coming back down. Um, we're waiting on the cabinet to get appointed. He's made his nominations, those can have an effect also. But my personal opinion is that Trump really wants and will do whatever steps necessary to bring mortgage rates down. And that is one of his main goals, to make housing more affordable. So here's just some info from Trump's last term. CPI means that's Consumer Price Index, which measures inflation. You can see what that did. Core CPI just strips out some of the smaller or um, not essential measurements of inflation. So that's going to, include your housing, shelter in there. But then take a look at what the import prices did as he did his last term. So some interesting data there. Here's what mortgage rates did when he was elected. They did shoot up. We've seen that actually almost happen identically right now. And then they moderated down lower throughout his first term. We're hopeful that that happens again on this time around. If you have any questions or any scenarios that you'd like us to look at, please reach out to my team. We're available, and shoot us a text, an email, or give us a call. Have a good one.